deadline to file, just a little more than a month away. If you still have this task on your to-do list, there are some changes you need to know about this year.
Crystal Faulkner, our good friend, is a certified public accountant, and she joins us with some tips, some tax tips this morning. Easy for me to say.
Happy New Year.
You too.
Good to see you, Crystal.
You guys are going to be especially busy. There have been a lot of changes, a lot of different things, yeah?
There have been many changes, least of which is the Form 1040.
Yeah.
Remember that postcard size tax return that everybody promised us?
Right.
Well, it's sort of postcard. It's not quite postcard size. It's smaller, front and back, and actually for people with very basic information like a W-2 and a standard deduction, it's simpler. But for people who do have a little more complexity, if they itemize deductions, if they've made estimated payments, if they receive a K-1 or from a pass-through entity, if they have their own business, it becomes a lot more complex.
Not really a postcard at that point.
Postcard. No. There's actually 6 new schedules that people need to be aware of this year, in addition to the ones that we've already had in the prior years. And these schedules need to be attached to your 1040, and you have to pay very close attention to the instructions because it's not intuitive. And then finally, there's no more 1040A or 1040EZ. Everything is filed on the 1040.
Okay, so everybody has the same basic form. Also, this year, I found this because I just finished my taxes last week. Fewer deductions. There were fewer deductions, though. I did notice that.
There were. And the one that's received the most attention is the reduced state and local tax deduction. It's limited to $10,000 per tax return. Now, here's the catch. Most people don't pay $10,000 worth of state and local taxes. That includes your Ohio, Kentucky local tax filings, as well as your property taxes. This is really only impacting high income earners, and even those people may not have gotten the full benefit in the prior years if they were subject to the alternative minimum tax, because that was not a deduction in computing that type of taxable income. There are also other itemized deductions, employee business expenses like professional dues, also employee, if you drive a car and you don't get reimbursed for mileage, that's
not deductible anymore.
That's not deductible. Investment fees, professional fees, those have all gone by the wayside. And then if you got divorced in 2018 and going forward, alimony is no longer deductible. However, the good news, if you're the recipient, you don't have to pay tax on it.
Okay. Well, let's finish things up. We're almost out of time with some more good news. What other good things can you tell us about?
Reduced tax rates. Most everyone received a tax rate reduction, even though they're not feeling it, because the payroll withholdings were reduced.
It came out through the year.
They got it all through the year. Also, there's this brand new qualified business deduction, 20% deduction on certain types of income. If you can qualify, if you have an S Corp, Schedule C, make sure you go seek professional advice because that's complicated. And then finally, a higher standard deduction. And if you have a child under the age of 17, you've got a new and improved child tax credit. It's doubled, and part of it can be refundable.
Very good. Thank you, Crystal, so
You're
much.
welcome.
I have a feeling we will see you again before all is said and done. All right, it's 8:12 now.